Hello, welcome to your Global Fashion, Apparel and Supply Chain podcast. Today, Wednesday, April 8th. A two-week ceasefire sends oil prices crashing 10%. Bangladesh garment exports are falling and falling faster. MEG prices spike 7% overnight after a strike on a key Middle East facility. And H&M, once Sweden's most valuable company, is still trying to convince the market it can find its way back. I'm Sedat Sezer, breaking down the news and insight you need to start your day. Let's get started. Let's start with what moved markets this morning. Trump announced a two-week ceasefire, and Brent crude dropped roughly 10%, landing somewhere in the $94 to $95 range. WTI briefly traded above Brent for the first time in 4 years. Gold went the other direction, upon uncertainty. Now, before anyone starts adjusting production budgets based on this, let's be clear about what a two-week ceasefire actually is. It's a pause, not a resolution. The Strait of Hormuz is still a question mark. Freight surcharges haven't been formally pulled back, and energy input costs for synthetic fibers and chemicals haven't reset yet. If you are a polyester yarn or non-woven producer, you felt the 7% spike in MEG prices this week. A monoethylene glycol, a core petrochemical input for polyester. That spike came straight from the bombing of a major SABIC facility in the Middle East. PTA prices stayed relatively calm, which means you now have a divergence between two of the main inputs that go into a single polyester fiber. That kind of cost distortion is hard to plan around. So yes, oil is down today, but the structural disruption in raw material supply hasn't resolved. This connects directly to what's happening in Bangladesh. Garment exports were already trending down. March data shows the decline is accelerating. The fuel crisis is real there. Roughly 65% of the country's energy supply comes from imports, and that supply chain is under pressure. Factory disruptions, shipping delays, and rising production costs are compounding at the same time. Meanwhile, EuroCham has formally flagged what it calls an unfair playing field in Bangladesh, citing concerns around environment compliance, labor standards, and business transparency. That's not a minor statement. EuroCham representing European business interest in Bangladesh, essentially putting a flag on the compliance gap there. It doesn't immediately strip Bangladesh of its preferential EU trade status, but it adds a pattern that European buyers are watching very closely. For Turkish manufacturers, this is worth reading carefully. Bangladesh difficulties create an opening, but I want to be precise about what kind of opening. Buyers who redirect orders won't automatically land in Turkey. They'll evaluate speed, compliance documentation, and price competitiveness all at the same time. If your factory floor isn't ready to absorb emergency volume without sacrificing quality, the opportunity closes before it opens. Same pattern, different geography. India is dealing with its own version of cost pressure. Yarn prices are rising fast enough that the entry-level shirt prices points that dominate Indian domestic retail are under threat. India's industrial body, CII, responded by submitting a 20-point agenda to the government, covering energy subsidies, export credit facilities, and logistic support. Vietnam also is considering waiving aviation and maritime fees for 3 quarters to buffer its exporters. Competing governments are moving. Textile industries in these countries are getting structured state support. That's the competitive context Turkish exporters are operating in. It doesn't mean the playing field is lost, but it means that price alone doesn't win the argument. Now here's where it gets interesting on the demand side. Europe's recession risk has moved from theoretical to tracked. The Centix Investor Confidence Index dropped sharply. The World Bank revised global growth estimates down. This matters for Turkey more than for almost any other apparel exporters Because the EU is Turkey's primary market. Demand softness in Germany, France, and the rest of the Eurozone is not a background condition right now. It's a live pressure point on order volumes and on the pricing conversations happening right now between brands and suppliers. Which brings me to H&M. The brand has lost roughly half its peak market value since 2015. Management is still trying to tell a rebound story. The problem isn't that the story is wrong. The problem is that the environment isn't cooperating. War-driven supply chain costs, consumer confidence erosions across Europe, and a competitive fast fashion landscape made recovery harder to demonstrate quarter by quarter. For Turkish suppliers who count H&M as a significant buyer, this is worth watching. When a brand is under this much financial pressure, the first lever they often pull is supplier consolidation. Fewer patterns, tighter terms, more compliance issues. The contrast worth noting is Levi's. They've upgraded their full-year outlook on the back of strong sales. The CFO is retiring, but the brand's performance trajectory is stable. For denim-focused Turkish suppliers, that's a relatively constructive signal on order stability. And the logistic picture has one more data worth mentioning. Amazon cut its USPS parcels volume by 20%, significantly less than two-thirds reduction it had initially threatened. For Turkish brands with an e-commerce exposure in the US market, the worst-case scenario for last-mile delivery disruption didn't materialize. But costs are still elevated, and that's the environment brands are navigating. The main question I want to leave you with today is, several competing countries are responding to this disruption with coordinated state support. Turkey's manufacturers are operating largely on their own balance sheets. The question isn't whether the opportunity is real. The question is, will Turkish suppliers be positioned to capture it by the time buyers are ready to commit? That's all for today's analysis. To make sure you never miss the insights behind the numbers, hit subscribe wherever you get your podcasts. I'm Sedat Sezer. Thanks for tuning in. I'll see you tomorrow, and until then, stay ahead of the curve.